Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Friday, June the 12th. Well, a bearish day today. We now have a change of trend to the downside. We have a lower high and a lower low on this current candle. We can see that we've just taken out the low of yesterday. So we have a downtrend in the first time frame. A red candle as well, which means that the candle was quite net bearish for the day, and a small body as well. Now, it's also potentially a candlestick pattern. The pattern is a harami pattern, and that's where the body of the current candle is engulfed by the body of the previous candle. The body of the current candle is within the body of the previous candle. Now, there's not much of a trend to reverse. It's only a trend that was occurring over the last 3 days. But I think it still probably has some significance. And we've already had a change of trend anyway in the first time frame for this market. Now, interestingly as well, we can see that we've had the price rejection from these two zones, very strong zones of resistance that we've identified. So a lot of downside price rejections. We can see the top of the candles, the shadows or the wicks, and there's been downside price rejection. Here the market has tried to open up near that zone, has traded up and was sold off. But there was also some buying coming in, just below the low of the previous candle. So that lessens the bearish impact of this candle. But still, the market sold off to close at roughly mid-range. Now that means that the bears couldn't really take control of this market, but neither could the bulls. So neither side has closed in control, or neither side has really shown commitment. Now, if we look at the pattern that might be forming here, we've potentially got a head and shoulders pattern. We have a nice second time frame uptrend here. We have the left shoulder here. We have the head, and then we have the right shoulder. And we now that we've made this lower high and lower low, and we have a change of trend in the first time frame, we now actually have the peak in the right shoulder. So we will have a neckline across this point here, and then the market trades down here and takes out the neckline. We need a nice strong close below the neckline for the pattern to be complete and to be valid. So quite an important next few days for this market if this pattern is going to come to fruition. The target for the pattern, if we take it out, will be measured from the top of the height of the head down to the neckline, projected down from the breakout point. So the target will be roughly down around this area, but we can look at that again if the market does break out. Now, it doesn't necessarily mean that the market will break out to the downside. Interestingly, though, if we do take out that support there, which is where the neckline runs through, we will also have a second time frame downtrend, because we'll have a peak, a trough, a lower peak, and once we take out that trough there, we'll have a lower trough. So that would mean that we would have had a change of trend in the second time frame. Now, that's generally why these head and shoulders patterns are important patterns, because generally they do denote changes of the trend in the second time frame. Now, looking at our Ichimoku indicators, we still have the Tenkan-sen on top of the Kijun-sen, but the Tenkan-sen is flat, which means that the market has no momentum, and that reflects this area here where we've got some sort of a very small trend, but really not a lot of trending activity, and we've had a lot of candles where we've been up one day, down the next, up one day, down the next, so a lot of indecisive trading through there. Interestingly, though, the Kijun-sen is pointing up, which means that the market might end up trading back up to the upside, but bearing in mind that we have this very strong area of resistance here, if we do trade up in there, then I think we'll probably just see the market sold off again. Now, the cloud here, the cloud twisted quite some time ago, and we're trading well up above the cloud, which means that the market's bullish. So also trading up above the Kijun-sen, but trading below the Tenkan-sen, which means in the short-term time frame, the market is not as bullish as it has been in the recent past. So I think we just need to see how this first time frame downtrend develops. If the downtrend does continue, which as technical analysts we agree that a trend will be in force until we have other evidence. So we need to consider that the market will trend down to this neckline. We need to look for a decent strong close below the neckline to give us a target down here, and probably will coincide roughly with this support area here. So an interesting few days coming up for the market.